Dead broke sin, I was wishing. Ah, the sliding's bad. Okay. Maybe that's better. I still don't like it. Whatever, we do it in the dark. I'm gonna. Hold on, now this is bothering me. I'm going to teach you how to trade. Pretty well. I mean, listen. I know you look around and you're like, this kid's just living on his own in his own room. Now, I'm going to show you how to find draw on liquidity. The number one task when trading is the draw on liquidity. Why? Because when you're trading, all you need to do is know where the market's going. For example, if we know this is the draw on liquidity, now how would we know that? How do we know it's not going to just bounce off of this, or you understand? And the reason I'm going to do this in replay is because actually, you know what? Let me make a random one, because I know a lot of people go, "Oh, what if they're like what if you just know what day you're doing it and you call out the draw?" I hate when people do that, because it's like, what's the point? I could really, I really care that much? Whatever. But we'll do that and start off with any random old day. And I just want to show how to do draw on liquidity. Obviously, we know what happens from here. It goes up, right? But that's weekly. When we're on the daily and the 4 hour, and there's just so much more to look at. Now, we could start off on the weekly to start with our analysis. We know this is 100% the next draw. I mean, you don't even have to know what's going to happen in the future to know that this is the next draw. Why? Okay, we got this break of structure. We got break structures to the upside. We know that this is the next liquidity pool. What else does that have to hit? It already took out all this sell side, and it's just been creating and going higher. So we know this. Well, this is how retail traders trade as well, but we know this is the draw, right? We know this is the actual reason it's going. Retail traders will just see this line and be like, "Oh, it's creating higher lows." And it is, but it's really just because it's a market maker model. And now it's targeting buy side liquidity and no more sell side liquidity, because it already rebalanced what it had to rebalance over here. So we know that's the weekly draw. That has nothing to do with what the video is going to be about today. Now, how do we implement a system? Hold on, So how do we implement a system where we could couple the draw on liquidity and integrate an execution? I'm in a position with Tesla right now because I know where the draw on liquidity is on Tesla. And just to break it down, and I always do a paper trade while I'm in a position so I can watch it. Just to break it down, this was one position here. After this inversion, had an internal sell side sweep, right? My bias was always looking to be bullish, right? As you could see on the monthly, straight up going down, 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 down. Sweep out a low right here. On the weekly, this is a very higher time frame low and just a completely obvious low. And we had a huge move up, right? And now we could go to the 4 hour. So we had that sweep. That's what I was looking for. So we had that sweep. I wasn't watching Tesla, and plus there was earnings, right? We knew this was going to go up automatically, right? We knew it was going to go up no matter what the earnings was, because it just swept liquidity. But that's besides the point. I want to show you how I'm getting in this position. And this is not hindsight. You can see right now the position is pretty much at break even. And markets, wait a minute, market's not closed yet. Wow, didn't even realize. Okay, position is pretty much at break even on what I'm at, because I just entered a couple minutes ago, maybe an hour ago. And we had this. This was the sweep I was looking for because I was looking for it to fill in more of this liquidity void here that was made after the earnings. I was looking for a sweep within one 4-hour candle and an inverse. Now, this was where you could just enter straight up right off of that close. Target the next draw, right? Or target like halfway for 1 and then 2, target the next draw. I missed that, unfortunately, but that was the plan. I had it marked out, I had everything. I actually wanted to make sure it was just a little bit cleaner because sometimes when the candle closes above this inversion, sometimes it could close up here and it's like, damn, that's so high in order to enter. So I went into the 1 hour and I found the next down close fair value gap to close in this bullish PD array right here, this fair value gap. Right, so we have this. Let me get rid of this for a second. We have this huge one. So we knew, okay, if it, and that's not an inversion, that's just a regular one. Now it could tap into this and go up, which it did, right? But how do we know when to enter? Here, here, here. So I just look for within this, I couple them two together, and I got this inversion here. And so I saw it close up, and that's where you straight up enter. And you always could put your stop right underneath the lowest candle right there. As you can see, it just wicks, 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 and it flies up. That's a nice trade. That's a 1 to 5 you could have hit if you targeted, obviously, the draws on liquidity. And why are these draws? Because they're low resistance. They haven't been swept. Each of them haven't been swept. So realistically, you could just, I'd say you could hit a 1 to 2.6 here, right? And clearly these are the draws because first off, you got to understand the structure of the market if you want to understand the draws on liquidity. The draws on liquidity are always going to be just highs or lows or prominent highs and lows. But the easiest way is look at what has been unswept. Now, if this one came up, swept out this and this, and then did that, I would be a little bit more hesitant to take that trade. Even though the higher time frame structure shows, okay, it's most likely bullish. But on this time frame, if it swept it out, I would be more hesitant. Anyway, it swept out this one, came down, created that inversion, and you got to understand, on the 1 hour, if the structure on the 1 hour doesn't look bullish, but the structure on the 4 hour looks bullish, then obviously you're going to know what exactly. Sorry, I'm getting confused. I was thinking about something else. If the higher time frame structure is bullish and this one's bearish, unless it's just swept out, now pay attention, unless it's just swept out a certain point of liquidity, you don't really have to worry about the lower time frames being opposing the higher time frames. So let's just say, right, 4 hour bullish, but the 1 hour looks bearish. 4 bull up and 1 hour bear. And I see this all the time, and people misconstrue their biases so much with it because they're like, well, how do I know if the 1 hour is bearish and the 4 hours bullish? Look on the 4 hour chart. What do you see here? Firstly, you see a huge break, a prominent break of structure right here. So we know before all this liquidity, yeah, it swept out this on the lower time frames. Before all this liquidity, break of structure, you got a liquidity sweep, you got an inversion, and then you got a 1 hour inversion right here to the upside that moved up. Now there was news today. There's something else. Huge news today, so it dumped down. But what else do we have? We have a bullish PD array. Now, that's one of the main reasons I took this entry. I know it's just going to tap this and go back up. But if you always want clear confirmation, you could wait for another inversion to get closed. For example, if this pushes up, closes here, you could always just enter in up here and, put your stop at the bottom of here and target. Let Let me remove that and target like that. That could always work too. Now, the only reason I didn't was because this wasn't my plan for the initial entry. It went all the way up to 180, 181, and I was supposed to enter in at 172, right? So I know, first off, what the structure is. I know what the draws are. It took out 3 solid draws for down here. That would have been a nice solid entry of 1 to 2.5. But now, if you look at the higher time frame, you see the clear sweep, right? Clear as day. You see the clear inversion. Now it's just rebalancing this fair value gap. It's going to go back up. I mean, zoom out. Blur your vision, right? Just blur your vision. What does it look like? Just a straight up market maker model. That's it. That's it. If you know the market maker model, that's what determines the draws and liquidity. Why would this fair value gap fail? Why? And I'm saying this right now. It's 3:04 p.m. May 15th. You could look back. If this shit ends up just inversing through and dumping me out, whatever, you take an L, you take an L. Look at the risk to reward, right? I take an L, sucks. And I look like an idiot, first of all. So my reputation gets shit on. But it's a lot, first off, it's a lot more risky for me to say this with this much confidence of saying, oh, yeah, there's no way it's going to get taken out or something. Then you guys look back and you're like, damn, this guy's low-key stupid or something, right? It's a lot more risky because I damage my reputation. But I just don't see this fair value gap failing in a way because I feel like we kind of already swept out what we need to sweep out and we got the big push up. Now, if that whole earnings thing just fucked up my bias, then it fucked it up. But we'll see. I think in the long term, we definitely have ranges like 220s, 260s, and up, honestly. Tesla has just been moving like straight up sideways, down, and then sideways. It's like this whole thing right here, whatever retail traders want to call that. It's going to be a breakout. I don't know. I don't make fun of them because they're profitable too. More profitable than a lot of ICT guys. And yeah, I mean that's just what I see. Now, if I'm gonna do a long-term position on Tesla, oh, and I totally just remembered this was supposed to be done on FX replay as well, but I feel like I'm better off at teaching this way. If I want to do a long-term position on Tesla, I got the sweep. Now, on the lower time frames, that's a sound position what I have. But on the higher time frames, if you're thinking, oh, what about these 205, 260s, all these draws? What about that? How would you get in on that? What I would say is we got the sweep. We could wait for this right here. That's what the plan was. That's why I had that marked out earlier. That's why. Because I want to see that get inversed. And usually when the lower time frames are looking bullish as well after the sweep, then the higher time frames are going to change in the future. After a sweep, though. So make sure you realize that it's after a sweep. So, I mean, definitely watch out for this fair value gap. I also took a trade on SPY today because I do options. Very nice move. Took out all-time highs as I had marked out with this purple line. And we could do a little review on that. Our structure, what was it? Clearly bullish. I mean, we don't have to contradict that at all. Nobody's that stupid. Nobody's going to be like, okay, if you're going down like this, then makes sense, right? But clearly you see you have the multiple, you just have the whole shift in structure. And I'm not going to get into that anyway, because I already got into that last videos. I just go off. I just keep going. All right, so weekly structure, what do we have? Actually, let me do this on ES because it's cleaner. On ES, we had this very nice sweep on the weekly. I already spoke about that. Let me get off of that. So we know what the structure is. Bull. You go through the time frames. What is it looking like? Bullish. 4 hour. What is it looking like? Bullish, right? All right. So market opened right here, right after this big ass news. We see 9:30. That's where market opened. I spent maybe 30 seconds on my pre-market analysis. I said, okay, yeah, this big imbalance. I looked at the 15-minute, and I backtest a lot. Like, I mean, a lot. So I knew that these two relatively equal lows. Yeah, this swept, but you had this big imbalance, and this was too tight. And once I saw this not just sweep it out, I knew, okay, there's going to be a beautiful entry here that's just going to run higher today. So I was waiting for this to get swept out. That's why there's that pink line there. And then once I saw it get swept out and it swept out these two, I saw the inversion. I got a good fill here. Stop. And like that. Now, you could play way tighter stop. I don't know exactly what my stop was, but this had way more room to run. This is just a low-hanging fruit. If you want to take a fucking one-to-one, go ahead. I don't like taking one-to-ones. But that's the all-time high. Now, the reason I also had more confidence is because look at the chart I'm looking at. It's SPX 500. Now, that plays a crucial role because, first off, you see SPX 500 taking out the all-time high here, right? The draw on liquidity. I knew that there was a draw. Everybody knew it was the draw. You see how many pips it already ran higher? Now, if you look at ES is pretty much what it runs off of. It hasn't even touched the all-time high yet. Right? I had all these draws worked out because why? Because they're low resistance. I had these planned out before it even happened. But why do these get hit? Because they're untapped liquidity, retail traders, resistance. There's resistance, right? Or support, actually, you could say either one, I don't care. There's support. What is it? Stops, 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 stopped, gonna be stopped. So that's how you know it was gonna run so much more because ES still had so much room. And yeah, this is pretty much where I found my entry. I'm a G, all right, I'm a G. The inversions hold. I told you, it's just the sweep 4 hour. If it fucking sweeps in one singular candle and creates an inversion, just click buy and put your stop under the sweep of liquidity. Just look. I mean, you don't gotta get a perfect entry. You could do it up here. Boom, draws. You understand what I'm saying? Like this shit will work almost every time. You have to understand the structure, of course, as well. Why did that work so well? Weekly structure, we were just pulling out from a big draw. Monthly structure, we just came out of a fair value gap. I haven't memorized. I watched this shit. Fair value gap. It's just a high time frame move. That's why it was such high probability. Anyway, that's it for today. That was really quick. 20 minutes. I mean, I feel like I didn't stop talking. I enjoyed it. All right. See you guys. If you have any questions, please let me know in the comments. Join the Discord. Links in the description underneath this video 100%. I talk in there. You know, there's some really cool guys in there. Appreciate you watching. If you have any questions, just comment.